Distance Education Center's radio Zoom classes. This is MEL Grade 11 Workplace Math, and I am Bronwyn Slade. If you'd like to participate live today, you can call the Wahsa studio at 1-800-465-7144 or 737-4017. You can also you can listen on the radio at 91.9 FM and also on the television at Bell Express View channel 972. You are always welcome to join me live through the Zoom link, which is available from your teacher and also from your DEC. Our classes are scheduled from Monday through Thursday from 9 till 10 in the morning. And we are wrapping up our first week of our 9-week course. A reminder of what work to submit for marking once you are ready to. The support questions, the ones with the pencil icons, are not for marking. They are practice problems that you decide how many and which ones are best for you to do. So if you are understanding a concept, feel free to skip problems. You don't have to do work just because it is there, but you should pay attention to what makes most sense for you. So skipping all the questions isn't necessarily the best choice, but picking and choosing based on your needs, I totally encourage. If you do need more practice, that's totally okay. Just ask and I will send you some more practice. The key questions, the ones with a little key icon, those are the ones to submit for grading. So please do all of these questions. I'm expecting them all and you're getting marks for all of them, whether or not you do them. So please do them all and show all of your work, your steps and your thinking. This way I can give you credit for all of your understanding. And if you're making any errors, it gives me information about what's going on so that I can hopefully help you improve. So then how do you actually submit your work for marking? Well, there's 3 methods. The first is to scan your work and send it electronically. So if you have a Apple device, you can scan your completed work through the Notes app, or if you have an Android device, you can use the Google Drive app. Both these apps come free with the devices and are fairly straightforward. You can also take pictures of your work if that is more straightforward for you. However, if you scan them, the files are slightly smaller and easier to send, and I can walk you through that if you need support. Then you can send it through either email at studentwork@nnec.on.ca, at cc2broadwood.slate@nnec.on.ca, or you can send it to me through Facebook Messenger at bslatewasa. The second method is to drop your work off in Sioux Lookout. We have an outdoor mailbox at our 74 Front Street location, or the bright red building next to the post office, and we have a small white mailbox at our side entrance. We are not open to the public yet, hopefully soon, but for now, just put your work in the mailbox and I'll get it and get it back to you as soon as I can. The third method is to hand your work into your DEC. So your DC can either send your work through the Express or fax it to 807-737-1732 or toll-free fax to 1-800-463-7852. Students are also welcome to fax their work in if you have access to a fax machine. If you'd like to connect with me through social media, both my Facebook and my YouTube channel are under the name B Slate Wahsa. So if you want to friend me on Facebook and subscribe to my YouTube channel, then you'll get notifications every time I upload one of our lessons. All of our radio Zoom classes are recorded and I post them to YouTube shortly after airing so that everyone can have access to them on their own time and can review things if need be. I also have short videos explaining common errors and confusing concepts on my YouTube channel and some technology tutorials to help you get set up using Zoom. So if that's a great place to access if you're needing some support instead of just doing a general web search, going there first to see if I actually cover what it is that you need, that hopefully I have, and then you don't have to search far and wide. If there's something you want me to cover, let me know and I can probably make a video for you. Math is a really visual subject, so I strongly encourage you to access the YouTube videos or join me live through Zoom. Only listening is only going to give you a very small portion of the instruction. Also, only using the IL booklets, again, is only going to give you a certain amount of support for learning these concepts. Utilizing the lessons is really going to set you up for the most success. If you don't have access to the internet and you can't get onto YouTube or join me live through the Zoom platform, then let me know and I can send you a copy of the recordings, which you can then maybe watch at the Learning Center or another device that you may have hopefully have access to. If you have any questions or concerns, please reach out and contact me. My email address is bronwyn.slate, which is spelled BRONWYN.SLATE at ednec.on.ca. My Facebook is bslatewasa. The phone number at the office is 807-737-1488, and my extension is 2209. You can also call us toll free at 1-800-667-3703. My office hours are Monday through Friday, 8 a.m. till 2 p.m., though I teach from 9 till 11 in the morning, so I'm not available during those hours, but leave me a message and I'll get back to you as soon as I can. All right. Today's lesson is lesson 3. We are looking at gross and net pay. So our learning goals for today are that at the end of this lesson, you can differentiate between and calculate net and gross pay. You can demonstrate an understanding of payroll deductions, and you understand monthly expenses and the beginnings of budgeting. You know you've met these learning goals because of these success criteria. You can define gross and net pay. You can explain the most common deductions, EI, CPP, income tax, and calculate net pay. And you can identify fixed and variable expenses and calculate monthly expenses. All right, so when will you use this in real life? Well, we're discovering how the world around us makes sense. Income and money are how most of our world runs. We are a capitalist system, and people working and making money and paying into things are how our society works. So understanding how that works is really important so that you can understand how much money you make, how much money you actually get to take home, and where that other money is going. And all of that is what we're looking at today. But let's first activate our brain with some mental math. So I'm not a fan of the math bad minutes where you sit at a table at a desk and you have a minute to do as many math facts as possible, or it's sent home for homework and you drill through math facts. I've even recently seen this in social media that this is still happening in elementary schools, and I find it just creates stress and anxiety in students and doesn't actually help students learn their facts. And many of us experience that and therefore feel like we can't do math because we were not successful in these sorts of activities when we were learning as young people. So I don't encourage that. And instead, we spend a little bit of time every lesson working on strategies that are transferable to various situations and give us skills and tools to do arithmetic, to be able to know our facts and get comfortable with the numbers, which I think is essential to being confident in mathematics and feel like you grasp these thoughts and ideas. So our question today is 8 times 21, and we're going to use partial products as our strategy. This is something that I use all the time now. I did not learn it as a student, learned it again as an adult, and it is super useful, I find. So the idea is that we're breaking down our numbers again into friendly numbers, but using it for multiplication. So 8 times 21 isn't a fact that I memorized. I was good at memorizing my 12 up to 12 times tables, multiplication chart. I got those down, no problem. That was easy for me, not easy for many folks. But once I got to multiplying my 13 times tables or things above that, then I had no tools to figure them out. And so I wasn't really set up for success. But this strategy is to think about our numbers as the parts. So I'm going to do 8 times 20 plus 1, because 21 is the same as 20 plus 1. So now I can do 8 times 20, which is, well, I know that 8 times 2 is 16. So 8 times 20 is going to be 160. So again, I do have that knowledge. My facts that does help me because I do know that. But there are other ways to do this. And then 8 times 1 is 8. So then I'm just going to end up adding 160 and 8 together, which is 168. And again, you don't have to write this down. I've written it down so that you can see, but you could just do this in your head. I can just do 8 times 20 is 160. 8 times 1 is 8, so it's going to be 168. You can just do it in your head if that works. You also, another way to do it, if you weren't sure how to do it with your 20 times tables, is that you could break it up to be 10 plus 10 plus 1. Because 10 plus 10 plus 1 is still 21. And then you could do 8 times 10 is 80, and 8 times 10 is 80, and 8 times 1 is 8. And so 80 plus 80 is going to be 160, plus 8 is equal to 168. So with these sorts of strategies, there's most of the time multiple ways to do it, and that is completely fine. And that's what I like about strategies that I'm trying to introduce in this mental math part, is that you can use them in ways that make the most sense for you. All right, so moving on to today's lesson, what do we need to know for what prior learning do we need to engage? So I just want to talk about the elimination of the penny in Canada. I don't even remember when this happened. A few years ago, it could be 10 years ago. I don't know. Time goes by. But Canada decided to stop making pennies. It was costing more money to make them than they were worth. And so it was just not valuable. So the pennies came out of circulation. No more pennies have been made. And it means that if you're paying in cash, your bill is rounded to something that doesn't have to do with pennies. So this happens at the end after all of your taxes, your fees, anything is done. This happens at the end. There's no rounding before. We include the cents all before, but at the end we round so that if you're paying cash, if you are paying with electronic payments, so credit card or debit card interact, you still pay the cents. But if you're paying in cash, your bill is rounded. So if your amount is $1, this could be any, doesn't just have to be dollar, but and 1 cent or 2 cents, then you round down to 0 cents. So this is the same as if it's $1.21 and $1.22, then it would be rounded down to $1.20. So we're really looking at this last digit where the pennies would be. If it's 1 or 2, we round down to 0 in that last place. If it's 3 or 4, then we're going to round up to 5. We're closer to 5 cents than we are to 0 cents. If it ends with 6 or a 7, then we round down because we're closer to 5 cents than we are to 10 cents. If it's 8 or 9, we round up because we're closer to 10 cents. And that's how it's decided. Again, if you're working as a cashier, you're going to have to get really comfortable with this. If you are, it's good to be recognized it, to pay attention to it so that people don't make mistakes. But just to be aware that we no longer use pennies and we round up and down based on that last place if we're playing with cash, either to 0 or 5, depending on the situation. Just a reminder, electronic transactions cent still counts. So we kind of need to understand both. We don't just get to cancel it all out. We need to remember both situations. Okay, active learning. What are we actually learning that is new? So our gross and net income. This is language that you may have heard, and then people often get mixed up. So this is on page 17 of your IEL booklet. We're going to look at gross income first. So this is the total income earned by an individual. So you, this is what we were talking about when we've been talking about the last few days in terms of hourly rate of pay and commission, salary. All of those things that we calculated were the gross income, how much money you earn in total. So this could be your yearly salary, like we talked about. So Bethany makes $35,000 a year. It could be based on your hourly wage. Example, Jonah earns $17.25 per hour for 35 hours a week, 50 weeks a year. And your paycheck will always state your gross income, your pay stub. It's not the amount that you actually take home, that you actually get, but it should, whenever you're tracking your information, your gross income should be stated so you know how much you are actually making in total, even though that's not how much your paycheck is going to be or how much you're going to get deposited into your account. And that's what people get confused about, is that your gross income is your total income, but it's not how much money you actually take home. So your net income, this is also on page 17. So this is the total amount of money that you actually take home, that you actually get, that actually shows up in your bank account or is on your paycheck and you can deposit. And this is your gross income subtracting any deductions. That's what your net income equals. So it's your gross, take away deductions equals your net income. But what are deductions? Why are we all of a sudden taking away money from the work that what you've earned? So your employer takes money off of your earnings to pay for various services and social protection plans. So this is something that happens for everyone in Canada. This is potentially different for some things are going to be different depending on the province or territory that you're in. Some things are going to be different depending on the industry that you worked in or your employer, but everybody has deductions. If you're working for an employer, if you are self-employed, then you need to figure that out, and that's going to be slightly differently. We don't cover that in this course, though. If you have questions, you're welcome to call me and we can chat and I can try to support you. But if you're working for an employer, every employer takes deductions off of your gross income. So the common deductions that happen that every employer must pay are income tax, both federal and provincial. So both for federal is Canada-wide and provincial is Ontario for where we are. And then every employee still also pays your Canadian pension plan, CPP, and employment insurance, EI. We're going to talk about all of those things a little bit more. Some workplaces also have other deductions. So they could be a company pension plan. So if you think about teachers are a great example who work for public boards. So if you are paying into the the Ontario Teachers Pension Plan, that's something that comes off of that's a benefit that teachers have, and very many other employers do that as well. Also, life, health, and dental insurance. So if you have benefits that cover your medications or cover glasses and visits to the dentist, cover mental health services or physical therapy or acupuncture, massage, things like that are all health benefits, and you pay a certain amount every paycheck and your employer pays a certain amount every paycheck, and that's how you get those services. And then also union dues might come off of your paycheck as well. Not necessarily, not for everyone if you're not in a union, but if you are, then that generally happens as well. There could be other ones as well, but these are very common. Okay, so let's look at these deductions a little bit in more detail because it's a little confusing and they happen to everyone. And so you're probably wondering, again, what happens? Why are you paying this money? Why are we taking this off of your paycheck when you've worked hard to earn that money? What's going on? So again, the Canadian workers automatically have 3 standard deductions taken off of their paychecks each pay period. This happens to everyone who's working for an employer. So first, employment insurance, EI. So the reason why we all pay into EI is that it provides temporary income support to unemployed workers while they look for employment or to upgrade their skills. So if there's a situation where someone is no longer employed because they are seasonal workers or they're working for someplace and they get laid off, their job is no longer relevant or available. This supports people so that they can still pay their bills, still buy their food, still make sure they're taking care of their families, and while they're looking for a new job. So there's some rules about how you're eligible for EI. So a worker needs to have accumulated 420 hours of insurable employment during the qualifying period. So you have to work a certain amount in the past year or so. And in 2021, for every $100 earned, workers contribute $1.58 up to a defined maximum of $889.54. The employer matches this, the employer pays the same amount. So it means that every year, all you are paying $889.54 at the most into EI, which really doesn't seem like very much, as that's about potentially 1 or 2 months that you might get back from EI if you are unemployed for a period of time. This is also EI also is parental leave. So if you're on paternity leave or maternity leave, this also is where that money comes from, is because every Canadian pays into it so that if we need it, it's there to support us. All right, so then the second one is the Canadian Pension Plan, CPP. So this is a monthly taxable benefit that replaces part of your income when you retire. So when you get to a certain age, you are potentially no longer working or you are working less, and you can apply for the Canadian Pension Plan, and you'll get that chunk of money, which then counts as income, is taxed, but supports you if you are working less. So generally you are 65 years or older and you currently reside in Canada. You have to have been here for at least 10 years since turning 18. So you can't just be someone who moves to Canada at 60 and then be like, oh, I'm going to get the Canadian Pension Plan. No, you need to have been contributing in it and been here for at least 10 years. And then you get a monthly pension until you die. Nice and chipper, but you get that money support every month until you no longer need it. So in 2021, the CPP contributions were 5.45% of the employee's gross earnings to a set maximum of $2,898. Again, the employer matches this. So the employer also pays this for every person. So at the most in a year, you're paying $2,898 into CPP. And then when you are retiring after 65 and you get that money, you're getting that money back over time to support your living. All right, and then the third one is income tax. Again, remember there is both federal and provincial income tax. And so this is a type of tax that governments impose on income generated by businesses and individuals within their jurisdiction. So this is why there's both the federal and provincial, and it's different depending on the province or the territory that you live in. Income tax is used to fund public services, so it pays government obligations and provides goods for citizens. So this is often when people are talking about taxes being too high or tax rates changing, or when politicians say they're going to lower tax rates. This is the tax that they're generally talking about, is income tax. But the reason that this money that we pay into every paycheck is it funds public services. So it's how we have healthcare in Ontario, in Canada. It's how we have education. You don't have to pay for your children to go to school their teachers, the principals, the custodians, the people who take care of the schools, the school buildings are all publicly funded. So everybody, that money is all paid into, and then that's split up to provide services for everyone, education services for everyone. Um, there's always issues with things, but this is what ideally how the tax system works. Paying for our roads, for our snow plow removal, paying for fire services, paying for police. All of these services are paid through taxes. Our government, their salaries and the upkeep of buildings, that's all of our tax dollars, is where all of that money comes from in order to have all of those services, libraries, uh, things, all the things like that, where if you have to go and you don't actually have to pay, health units, they're getting paid through taxes. So how we actually figure out how much each of us pays is based on tax bracket systems in Canada, and it shows you the tax rate that you will pay on each portion of your income. It's a little bit confusing, and we're going to spend all of next lesson looking at that specifically, just because it's a little bit confusing about how it's actually calculated. Most people don't actually calculate it. If you're doing your taxes by paper, then you would, but we're going to look at taxes and how you claim income taxes and calculate things in the next few lessons. Okay, so for this example, we're going to do some examples about what all this actually means. So Mary earns $36,500 annually, so per year on average, and is paid weekly. Calculate her annual net pay. So how much money she makes in a year that she actually takes home. So her gross pay is $36,500. That is her gross. That is how much she makes in general. But her annual net pay, how much she makes in a year, how much she takes home, is going to be different. But we need to know her deductions. So if we have for EI, how we calculate this, and this isn't calculations that you generally have to do, this is how your human resources department does this, but to understand what's going on, is that for every $100, you pay 1.58% up to $889.54. So what that means is that we take our gross pay, so 36,500, and we times it by 1.58%, which is equal to 36,500 times 0.0158. And if we calculate that using our Desmos calculator, so do that calculation. And that is $576.70. So is that more than $889.54? No. So that means that Mary does not pay $889.54. Mary pays $576.70 into EI for that year. So I'm just going to write that over here to keep track. So that's how much EI Mary pays in a year. Okay, so then how much CPP does Mary pay in a year? So we're going to do the same thing. We're going to do 36,500 times, and the rate for CPP is 5.45%. So we do 36,500 times 5.45%. So that's equal to 36,500 times 0.0545, which we'll do on our calculator. Again, Desmos calculators are available for everyone, both on devices and online. Okay, so that equals $1,989.25. So again, we look and we say, okay, CPP, you pay up to $2,898.30. Is Mary paying more than that? No, she's only paying $1,989.25 into CPP because she doesn't make enough to pay more, to pay the maximum. Okay, so now we're going to, so that we figured out how much EI she pays and how much CPP she pays. And then I've calculated the federal and provincial income tax because it's a bit confusing, and we're going to look into it. We're going to do a whole lesson on that in our next lesson. So I've done that work for this example, but I'll show you how to calculate that in the future. So then to figure out her net pay, we've figured out the 3 standard deductions. So how you figure out next pay is you do gross, take away EI, take away CPP, take away income tax. Because all of those are going to be paid into your human resources, take that money off of the amount that you paid or you got paid, and then forward it to these various places. So the gross pay is $36,500. Take away EI, which for the year is $576.70. Take away CPP, which is $1,989.25. And then take away the income tax, which for federal is $5,475.00. And take away the provincial income tax, which is $1,843.25. Remember, I have calculated these. Those numbers came from, I calculated them already. So they seem like magic because they are magic right now, but I'll show you how to do that in the future. Okay. So what does that all turn into? So we have 36,500 is the gross pay, and then we subtract on our calculator. So take away EI, take away CPP, take away federal income tax, take away provincial income tax. So that equals $26,615.80. So Mary's take-home pay, her annual net pay, so how much money she actually takes home in a year, is $26,615.80. And so this is why it's really important to know your net pay, not just your gross pay, because you can see her net pay is almost $10,000 less than her gross pay because she's paid into all of these things, which feels like you're losing money, but you're investing in your future. You're investing in your life because you're paying for other things that everybody has to pay into, and everybody pays proportional to their income. So if you make more money, you pay more. If you make less money, you pay less, but you still have access to all the services. And that's how you calculate your net pay. Okay, let's do another example with a larger income so that we can really see how this works differently. So example 2, Reggie earns $150,000 a year as a professional hockey player. Calculate his yearly net income. So the same, Reggie is a Canadian working in Ontario. It's the same idea, just with a lot more money. So EI, we're going to do the same thing. We're going to do 150,000 times 0.0158 because it's 1.58%. And so that equals so do that on a calculator. $2,370. Okay, so this is where it gets tricky. When it says up to $889.54, that means Reggie, with Reggie's calculation, it's more than that, right? So that means that Reggie only pays into EI $889.54 because that is the maximum you can amount. And so when people talk about how at the end of the year they've hit their maximum contributions and so they all of a sudden are getting more money, it's because they've hit this $889.54. They've already paid that, and so they're not paying any more into EI for that year. Okay, so CPP is the same idea. We're going to do 150,000, my bad, times 5.45%, so 0.0545. And that equals doing it on my calculator, $8,175. So again, that is more than the maximum, right? The maximum is $2,898. So that means that Reggie only pays $2,898 into Canadian Pension Plan. So that might feel a little bit like no fair. This person makes so much more money and they don't have to pay as like they are not paying very much EI or CBP. Fair enough. Where it really gets different is income tax. So income tax, again, I calculated this on my own time. We will learn how to do this. So this is where these numbers came from, is that I calculated them. So looking at our total, because for the income tax, Reggie pays for federal, pays $30,717.61. And for provincial income tax, Reggie pays $12,986.41. So this amount, there isn't a maximum that you can pay for your income tax. This is just calculated based on that gross income. So Reggie's paying significantly more income tax than Mary paid because he makes significantly more money. Okay, so then his net income is still equal to gross, take away all the deductions. So 150,000, take away EI, $889.54, take away CPP, $2,898.00, take away federal income tax, $30,717.61, and provincial income tax, $12,986.41. And so this is how it sort of balances out in our society, is that how everybody takes care of everybody else. Because Reggie makes a lot more money, and so Reggie pays a lot more income tax. And this means that he is supporting people who don't make as much money, and they are still getting education, they're still getting health services, they're still having access to all of those services that if they were expected to pay out of their own pocket, they probably wouldn't be able to. And this is the benefit of having a public tax system, and why having higher taxes is really beneficial for the whole society opposed to just the individuals. Whereas if everything's privatized, then it doesn't matter if you make 36,000 or you make 150,000, you still have to pay for the same amount for services like healthcare or education. Okay, so I did all that calculation, I did all that subtraction, and we get $102,508.44. So Reggie's income is, so net income, how much he actually takes home, is $102,508.44. So he still takes home over $100,000, even though he is paying almost $50,000 in deductions. But he still takes home a significant amount of money. And that's what his net income would be. And that's how it's different depending on how big your income is. All right, so now you should be able to do the support questions on page 19 to 20, questions 1 to 3. All right, then we're going to briefly look at monthly expenses. So this is on page 18 of your IL booklet. So this is the money that you spend, including anything that you buy. So it's both your planned and unplanned expenses. We can call them your fixed and variable expenses. So your fixed expenses are your rent, your mortgage, your car payments, your insurance, water utilities, cell phone, internet, things like that, that you know how much it's going to be every month. It's the same amount every month. Your variable expenses are things that change. So food, gas, clothing, entertainment, heat, those are all going to be things that are different depending on the month. So some months you're probably going to spend more money on food than other months. It might be similar, but so you might have a rough idea of how much you generally spend on food in a month, or gas. Heat, if you think about, it's going to be in the winter. If you're buying wood, then you need to plan for when you're going to be buying wood, and that you're going to have that cost when you buy your wood. And then when you don't buy your wood, then maybe you're saving for the next year when you need to buy wood. Or if you're paying oil or propane or electricity, then you're in the winter months, that's going to be higher. If it's a colder winter, for longer winter, then that heat cost is going to be variable. You don't know what it's going to be based on the weather. So you kind of have to be prepared for it to be for whatever it's going to be. And then you could also think about as essential or non-essential costs. So essential are things like housing, food, transportation. Those are all everyone needs to survive and take care of themselves. Non-essential might be entertainment, new clothes, gym memberships, cell phone, computer, and that's really going to be debatable in terms of what people believe is essential and not essential. So having a cell phone, we're pretty dependent upon having communication and access to that. So most people might say that that's an essential expense. Other people might say that it's not. So it's a personal decision about what's essential and what's not. You need to decide that for yourself. Okay, so then how we actually do that budgeting, how we think about that in our making our plans. For example, Kelly spent the following in the month of April. Calculate her fixed expenses, variable expenses, and the total money she spent all month. So her fixed expenses are the ones that do not change, that are going to be the same every single month. So rent is $625. That is going to be the same every month, and it's inclusive. So that means that it includes your utilities, your heat, your hydro, your water. We don't have to calculate any of that because it's already included in the rent. So then so how I'm going to do this is I'm going to make a list of fixed and a list of variable. And I go through all of the expenses and decide if it's fixed or variable. So rent is fixed. Groceries is $190. That is variable cost. We don't, every month it's going to be slightly different. Our restaurant cost is variable. Car payment is $210. That's fixed. That's going to be the same every month. Car insurance is fixed. It's the same every month, $115. Gas is variable, depending on if gas prices go up, how much you drive, $145. Cell phone is fixed. Generally, I mean, it could be different. You could have a plan where it's $50 every month, or it could be pay as you go. I'm going to say that it's fixed. New running shoes for $80. I'm going to say it's variable cost because hopefully you don't need to buy running shoes every single month. $70 on entertainment. That is variable. and $53 on her mom's birthday present is variable. She doesn't have her mom doesn't have a birthday every single month. So the fixed costs are rent, $625 plus car payment, $210 plus car insurance, $115 plus $50 for a cell phone. So that's $1,000 in fixed expenses. So every month, Kelly has to have $1,000 to cover those expenses that she knows going to happen and knows how much it's going to be. Then the variable expenses are the groceries, $190 plus the restaurant going out for food, $34 plus the gas, $145 plus the running shoes, plus the $70 in entertainment, plus the birthday present, $53 is $572 in variable. So it isn't every month, it isn't going to be 572, but it's probably going to be something around 572, right? Because you still have to buy groceries, you have to pay gas. Those things are still going to happen. It might be some months it might be lower, some months it might be higher. So then her total expenses are her fixed 1,000 plus her variable 572. So $1,572 is how much money Kelly spends in this month of April. All right, so now you are prepared to do the support questions on page 20 to 21, questions 4 through 6. All right, let's consolidate what we learned today. So we are doing lesson 3 today, gross and net pay. So a reminder that gross income is your total earnings throughout a given period before any deductions are made. It's how much you make in total. Your net income is your take-home pay, so the amount employees earn after all payroll deductions are subtracted. Your standard deductions, so the things that are subtracted from your gross income to get your net income, are your CPP, which is income that you're paying into for when you are retired or workers are retired. Your EI, which is your income for unemployed workers while they look for new jobs, and also parental leave. That's what we're paying into. And income tax, which pays for services such as healthcare, education, and national defense. So again, that's what we're paying into. And that's why we take that money off of your paycheck. And then we learned about monthly expenses, where we have fixed expenses, which are the same amount each week or month. And they're generally paid at the same time each week or each month. You get a bill around the same time, so you know when that's going to happen. And variable expenses are that usually change in amount or in how often they are paid. So how often you need to go get gas, or how much you're paying into heat this month. That's all variable, that changes. So our success criteria, knowing that you've met the expectations of this lesson, you can define gross and net pay. You can explain the most common deductions, EI, CPP, and income tax, and then how to calculate next pay. And you can identify fixed and variable expenses and calculate your monthly expenses. So if you can do all of those things, you have covered this lesson. All right, so we have a few minutes to do a couple of practice questions. So number 1, Zoe earns $11.50 per hour. She works 35 hours a week. Here are her weekly deductions. So we have EI, CPP, income tax, our company pension plan, and a health plan. Those are all that money is going to come off of her paycheck each week. So first, determine her weekly gross pay. So how much she takes home. So this is $11.50 times 35 hours a week. So yes, this is not minimum wage. This is just a math problem. So the number is not going to be accurate. It's not legal to get paid $11.50. But for the sake of this question, that means that her weekly gross pay is $402.50. So every week, her gross pay is $402.50. That's how much she earns. Her total deductions, so we're going to add together all of her EI, all of her deductions. So $9.04 for EI, plus $14.41 for CPP, plus $49.10 for income tax, plus $10.77 for her company pension plan, and plus $4.85 for her health plan. So add all that together. I know that it takes time to write it all out and to do the calculations, but this communicates to me what you're doing. It helps me understand if you missed one by accident or if you added something else in mistake. So that's $88.19. So her deductions for that week are $88.19. So then her weekly net pay is her gross, take away her deductions. So $42.50, take away $88.19 is equal to, so this is how much she actually takes home from and gets paid. $314.31. So that's what her check is going to actually be. Okay, and that's how you calculate deductions with that information. Number 2, Caleb tracked his spending for a month, calculated his fixed expenses, variable expenses, and the total money he spent all month. So this is another way that you could track your, you could look at your bank statement where it has all the dates where you spend all that money. And then you can figure out how much you need to budget. So I like fixed and variable as budgeting options opposed to essential and non-essential, because that's really subjective and really going to be dependent on the person and the situation that's going to change. Whereas your fixed and variable, you kind of are going to be planning for, so that you can plan for those unexpected things as some variable options. So we have gas is variable, 53, groceries variable, 82, hydro is going to be 135. Actually, hydro probably is variable. It's going to change depending on how much hydro you use. It's probably going to be around that, but it's going to change. Groceries again, $77, which is realistic. Many of us buy groceries more than once a month. Car payment, $238. That's going to be fixed. Internet, $80. That's going to be fixed. Gas again, $68 variable. Groceries again, $85 variable. Car insurance, $110 is fixed. Cell phone, $85. We're going to say is fixed. Groceries again, $60. Rent, $540. Savings transfer, $80. It seems like this person, Caleb, is always putting $80 into savings. So I'm going to say that that's a fixed thing that they do every month. So we've organized our amounts. I'm going to say, okay, so we're going to add up our fixed amounts. Do this on a calculator quickly. And again, everyone's fixed and variables are going to be different depending on their situation. So we have 1,133 as Caleb's fixed amount for spending. Every month he has to have that amount. And then for variable costs, we've got all those groceries and gas. Again, add them all up. You can totally do this by hand if that feels better for you, or use a calculator. $560 is the variable cost. So then, do we answer the question? No, we need to know the total. So the total are the two added together to figure out how much money he spent all month. So it's $1,693 is how much Caleb spent that month. All right, and that wraps up our lesson today. So if you have any questions, please reach out. You can call me at the office at 807-737-1488, extension 2209, or toll free at 1-800-667-3703. Email me at bronwyn.slate@nnec.on.ca, or connect with me on Facebook at bslatewahsa. Remember, this will be uploaded to YouTube, also at bslatewahsa, so you can watch it again at a later date if need be. Thank you so much for joining me. I hope you have a lovely day, and miigwech.